If you're a Volkswagen investor and you've been listening to what the company has been saying in particular about where it's making its profits from and where it's actually investing them and what it's going to do with them, then you might be a bit surprised to see this data because it doesn't really reflect what the Volkswagen Group have been saying. In fact, it shows a very scary situation for the company. Hello, my friends. Welcome to the channel. I'm the Electric Viking. Great to see you. Welcome to all the new subscribers. Welcome back. Everyone else, Volkswagen Group, they have nearly $190 billion in debt. They say they're going to borrow another $200 billion so that they can win the EV market race. But the thing is, well, 1/3 of the entire global car market is China. The country of China is 1/3 of the entire global car market. That's just reality. 27 million cars per year. The other reality is that that's the biggest electric car market in the world by a mile. And Volkswagen is getting their pants pulled down. Literally, their pants pulled down. They're getting their butts spanked in front of everyone. Why do I say that? Well, they very publicly announced in China and to the rest of the world that they were building numerous EV factories in China, which would produce excellent cars, lots of them. And now the Chinese would say, yeah, okay, we accept you as an EV maker. We will buy your EVs. That's what Volkswagen have been saying for a couple of years, even more loudly over the last 6 months. But unfortunately, it hasn't turned out that way. EV sales in China in the first 3 months of this year have actually increased pretty significantly versus the first 3 months of last year. In fact, EV sales have increased by 24% in China in the first 3 months of this year versus the first 3 months of last year. That's a big increase. BYD have increased their sales by about 90%. Tesla's up about 27%. Aeon, they're up by around 45%. There's some companies doing very, very well. Volkswagen is most certainly not one of them. Volkswagen makes 50% of its global profits, or did last year, from China. Well, that's about to go kaput. It is. Here are the facts, 100% certain, because have a look at their sales. They've already lost sales in both areas. Sales of their internal combustion engine vehicles in China are down 15% this year. 15%. Now, they're already down last year versus the previous year significantly. But this year the start to this year is disastrous because Chinese consumers are actually saying, yeah, you might be making these EVs, but we don't want them. Right now, I think there's a very high likelihood that Volkswagen has a lot of electric cars sitting in dealership lots doing sweet FA, doing nothing. They're just sitting there. Why would I say that? Well, there's pretty compelling evidence. Volkswagen have said it has ramped production of EVs in China. If that is actually true, there's no possibility other than what I just said. It has to be the case that they have a whole bunch of cars just sitting in parking lots because Volkswagen sold 38% less electric cars in the first quarter of this year versus the first quarter of last year. 38% less. That's coming from a pretty low base. Volkswagen sold 16,611 EVs in China in the first quarter of 2023, meaning they sold around about, just over 5,500 per month in the world's biggest car market, in the most important car market for the company. Now, a lot of people say, no, what are you talking about? It's Europe. But those are the kind of people who, I'm sorry, you haven't ever actually looked up Volkswagen's profit loss statements, looked up their car sales. China is well and truly miles ahead of any other place for importance to the Volkswagen and their future. And it's too late. They've just missed the boat. The boat sailed off into the horizon. It simply happened. And that's what you're seeing here reflected in Volkswagen sales. What is even more scary about this is that you think, Tesla's reduced their prices in China. So has BYD. Everyone's doing it. But Volkswagen, actually, their cars are extremely cheap. And what is even worse about this is that in the fourth quarter of last year, Volkswagen sold 27,000 EVs, which was a good increase. I mean, that's about 9,000 per month. However, this year, first 3 months, it's down 56%, a 56% loss. In other words, consumers are saying, yeah, why would we buy one of your cars? Because there's too many other good options for a similar price. In China, ID4 and ID6 electric SUVs are manufactured by both SAIC and FAW. FAW, by the way, builds Toyota's new BZ3. FAW also makes the ID4 Cross and the ID6 Cross versions, while SAIC produces the ID4X and the ID6X. They differ not only by manufacturer, but they also have some differences in styling and color schemes. CarNewsChina.com says the ID3 model is manufactured only by SAIC, while FAW produced the upcoming ID7. The ID7 is their brand new electric sedan. Will that sell well in China? It's a pretty niche car. I mean, that price range for largish sedans, they're not unpopular, but they're certainly not an emerging category. There's not a lot of sales there. That's the reality. Sales by model, the ID3, 5,767, the ID4 Cross, 4,452, the ID4X, 3,518, the ID6 Cross, 2,000 units, and the ID6X sold 815 in Q1 of 2023. So why is this happening? Well, one of the reasons cited for the decline of Volkswagen's EV sales in China is the recent abolishment of EV subsidies starting from January 2023. This policy change, combined with a large-scale price war among manufacturers and the launch of numerous new EV products, has significantly impacted Volkswagen's EV sales. But the question I have for you is any of this going to change in China in the next 10 years? No, absolutely not. This is an incredible competitive scene here. There's more than 100 electric car manufacturers all fighting for sales, and realistically, there's no compelling reason that anyone would buy a Volkswagen EV versus many other brands that they perceive as technologically more superior. And it's true in some ways. I mean, the MEB platform, it's not the worst. It's certainly not a Toyota EV platform. It's nothing to that extent, but it is very heavy. I mean, realistically, have a look at the weights of their cars. The ID3, it's heavier than a Tesla Model 3, and it's way smaller. It doesn't make sense. Volkswagen will tell you themselves that the reason for that is the platform was actually structured and made to fit big cars. So it's been kind of engineered to be very solid, but it's also therefore very, very heavy. Whilst overall new car sales in China did decline by 13% in the first quarter of 2023, EV sales have increased by 24%. So it's like Volkswagen is on one boat. It's on the sales declining boat, sales going down by 13%. In the overall market, it's actually worse than that, because if you just look at internal combustion engine vehicle sales, they're actually down by 23% in China in the first quarter of this year. That's terrible. And then the other boat, 24% increase EV sales. Is Volkswagen on that boat, or is it on this boat? Well, less than 5% of Volkswagen's cars that they produce in China are electric. It's very clear they're on the boat that's sinking, not on the boat that's sailing away. But what is even worse about all of this is that it appears as though Chinese consumers only actually want, really, one of Volkswagen's cars. The ID3 had a sales increase of 25.5% over the first quarter. However, the ID4 Cross, the ID4X, the ID6 Cross, the ID6X all contributed together to a massive decline. I mean, down 46%, down 54%, down 51.6%, down 65%. The thing is, this wouldn't look so bad if Volkswagen hadn't have said, hey, we have all these new factories coming online to build more EVs. We'll have more stock. Sales in 2023 are going to be massive in comparison to 2022. And that's what they said. Volkswagen's investors therefore believe that would happen. Reality is, it hasn't happened. The other reality is, Volkswagen slashed the prices of all of its cars, all of its electric cars as well. In fact, the entire ID lineup had a discount of $6,000 applied to it. $6,000. That doesn't include dealer discounts, which are reported to be sometimes several $1,000s. There's a minimum $6,000 discount. Now, in some markets, the Model Y, the Model 3, they're not much more expensive, or they're similarly priced to an ID3 and an ID4. But in China, the ID3 and the ID4 are significantly cheaper, and they're still not selling. There's simply nowhere to go from here. Volkswagen can't discount prices. They're not making a profit as it is. They can discount more, but they just simply lose more per car sold. So what happens if Volkswagen all of a sudden turns around and says, hey, we now have production capacity of 500,000 EVs in China, or 1 million, in order to replace our gasoline-powered sales? Imagine how much money they would lose in a single year. When you've already got $200 billion of debt and you're about to borrow $200 billion more, how much money can you afford to lose in the one market where 50% of your profits come from every year? It's an unwinnable situation. I just don't see an out here. I just put myself in the position of their CEO and I think, what would you do? What would you do? Let me know in the comments. Thank you for watching.